My name is Pule Taukobong. I'm the chairman of Africa Angels Network, and you're watching AFK Insider. If I look at how do we view what is called a balanced portfolio, when I was in the stockbroking and finance, say you are continuously balancing your portfolio. Here, we're not going to chop and change as often as we think, but we can see which companies are doing well, which companies are struggling, which companies aren't going to make it. I mean, the first thing they tell you in the various angel groups is that 50% of your companies will die, 40% of them will kind of tread water, and 10% of them will do pretty well. Now, I do believe those ratios can be challenged if you have a more active approach, but I'm also very much aware that not all the companies would make it. But being involved, including strong mentorship, including strong guidance and access to networks helps those businesses grow. In terms of being able to analyze before, that's where you've got to do your own due diligence. But you can't do the due diligence as though I'm approaching a large VC or private equity type transaction. How do we stay on track as an angel investment firm? So I think our approach again is unique in the sense that we have mentors that are industry related that are part of the team. So if I look at the media and entertainment side, we've got Malik Yoba, who was a great actor and in the media space here in the US and is also doing quite a bit of work on the continent. He gives our portfolio industry-related news and mentorship. If I look at the mapping space, we've got a gentleman who's done great in mapping out of India called Srinath. He gives our mapping startups. He's sharing information with us as the management company as well. So through our mentors, we learn a lot. The mentors don't only share knowledge with our investees or entrepreneurs that we've backed, they also share knowledge with us. And then there's a lot of traveling and reading. So I'm often in the US because the angel investing scene in San Francisco has been going on for quite some time. We see New York is much more developed. DC is chasing New York. So for me to come here and start learning and seeing what the trends are, it allows me when I go back home to be aware of, okay, this is what's happening internationally. This is what's happening in my market. How do I use the skills that I've learned internationally to leverage and help support our market? My experience and the advantage of an early stage is that don't be scared to pivot. You're at a stage where you're small, you can try different things. When you're a big company that has a market cap of $3 billion, you try new things, it's a bit more riskier. You're saying, yes, we're a financial firm, but today we actually want to sell cell phones. That's a bit tricky. I think the added advantage of being an early stage business is that, yes, you've identified things, but don't be scared to try things. Don't be scared to be risky in terms of what are we going to do today, how are we going to attract our business, how are we going to get reach to our clients. Try things that haven't been tried before. You only know what you know, but as soon as you break those boundaries, and you can do that as an early stage business. Even when we started, I had this great vision. I thought I'd be very comfortably raising millions of dollars. Then I had to change how it worked. I had to say, okay, actually I can only, since it's my capital, write investment tickets of between $10,000 and $50,000, and these are the sectors I'm going to focus on. So as an early stage business, you have the room for trying different and exciting things. Seize that. I look at a return not just numerically. So we have three goals to achieve by the 1st of January 2020. One is to have created 1,000 jobs through the startups and businesses we've invested in. The second goal is that at least 33% of our businesses must be women-led. And the third point is we want a 5x return. So 500% at the very least to have returned by 2020. So that's how I define a return. It's not easy. That's why it needs an active approach. Roll up your sleeves and be involved. Help your businesses scale. So even when I'm in the US, I try to bring some of our businesses here so they can see how things are happening in more mature markets from an angel investing scene and from a tech startup scene, so that they know what they need to do back in their market as well. So it's challenging, it's long hours. As I said, we're currently in about to be in 12 startups, and it's a lot of work with a small team. We've opened up our first Africa office in Johannesburg, and we're hoping to open up our next one in East Africa and in West Africa. So in terms of what makes the ecosystem or the startup landscape different from Africa versus here in the US, it's much more in its infant stage. In terms of, if you look at an ecosystem in a couple of African countries, or you look at an ecosystem here in the US, ex-entrepreneurs are very much involved in the ecosystem in terms of giving their skills back. Lawyers are very involved in the ecosystem. Different rounds of funding. You've got VCs, you've got private equity players, you've got angel investors, all acting together, sharing deal flow. That's still at a much earlier stage on the continent. So we need to bear in mind, which is one of the reasons that we have a longer term view, because the ecosystem isn't as joint as yet. It'll happen. Whether it happens in the next 3 years or 5 years or 8 years, I don't know. But until then, we have to have a longer term view. We have to have a much more involved business building type approach, which will then allow us to build the ecosystem. I have an email address that they can email us on their presentation. It's info@africaangelsnetwork.com. But in all honesty, the best way to get to me is get a warm referral from someone who knows us. Fortunately, the business has grown itself, but it does always help to have a warm intro of someone who understands your business and is putting your case forward.